Class 12 Accountancy Numerical Problems Solutions. Presented by NCERT.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Guarantee of Profit to the Partners Solutions, Problem 32 Solution. The problem statement is as follows. X, Y, and Z are in partnership, sharing profits and losses in the ratio of 3:2:1 respectively. Z's share in profit is guaranteed by X and Y to be a minimum of 8,000 rupees. The net profit for the year ended March 31st, 2000 XA was 30,000 rupees. Prepare profit and loss appropriation account. So, as per the problem, we have to prepare the profit and loss appropriation account. Nothing else. It is given in the problem that the net profit for the given year is 30,000 rupees. Now, we know that the net profit is nothing but a credit balance in the profit and loss account. For distributing this net profit, we prepare the profit and loss appropriation account. So, we need to transfer this net profit on the credit side of the profit and loss appropriation account. Also, as we are transferring this net profit from the profit and loss account, we need to debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let's leave out the profit and loss account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let's prepare the format of the profit and loss appropriation account as it is not yet prepared. Let's first write the title as profit and loss appropriation account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for particulars and amount in rupees on the debit side. Let's have the same columns on the credit side also. Let's then write by profit and loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the profit and loss account to the profit and loss appropriation account. Let's then write the transferred net profit amount of 30,000 rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit amount from the profit and loss account into the profit and loss appropriation account. Now, as we have already discussed, this problem is totally about distributing the net profit to the partners. So, there will not be any other entry in the profit and loss appropriation account and we can directly jump to the distribution of the net profit among the partners. Also, it is given in the problem that the partners share their profit in the ratio 3:2:1. Let's now calculate the share of the net profit for each partner as per this ratio. Before we proceed with the calculation, there is one thing worth noticing here. It is given that the partner Z is guaranteed by the other two partners X and Y that he would get a minimum profit of 8,000 rupees. It can be more than 8,000 rupees, but it should not be less than 8,000 rupees. And if there is any deficiency, it would be borne by the other two partners X and Y. So, in the working notes section, let's first write the header profit sharing to indicate that the upcoming calculation is related to the sharing of the profit among the partners. Now, let us also have a subheader to calculate the profit share as per the profit sharing ratio. Now, the profit share of the partner X is equal to the total net profit amount of 30,000 rupees multiplied with his profit sharing ratio 3/6. Cancelling with 6, 6 ones are 6, 5,000s are. Now, if we multiply the remaining 5,000 rupees and 3, we get 15,000 rupees. This is the share of profit for the partner X. Now, the profit share of the partner Y is equal to the total net profit amount of 30,000 rupees multiplied with his profit sharing ratio 2/6. Cancelling with 6, 6 ones are 6, 5,000s are. Now, if we multiply the remaining 5,000s and 2, we get 10,000 rupees. This is the share of profit for the partner Y. Now, the profit share of the partner Z is equal to the total net profit amount of 30,000 rupees multiplied with his profit sharing ratio 1/6. Cancelling with 6, 6 ones are 6, 5,000s are. The resulting value of this calculation is 5,000 rupees. This is the share of profit for the partner Z. But it is given in the problem that the partner Z should get a guaranteed profit amount of 8,000 rupees. But as per the profit sharing ratio, we are getting his share of profit as 5,000 rupees. Now this 5,000 rupees is less than 8,000 rupees, right? So we need to find the difference and adjust it from the share of profit of other partners. In other words, we will reduce the other partner's share of profit and adjust that amount to Z's share of profit so that Z would get guaranteed profit amount of 8,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So the deficiency of Z's profit share is his guaranteed profit amount of 8,000 rupees minus his calculated profit share as per the profit sharing ratio, which is 5,000 rupees. Subtracting, we get 3,000 rupees. So this deficiency should be adjusted from other partner's profit amount. Also, it's given in the problem that this deficiency should be borne by the other two partners X and Y. But the question is, in what ratio? See, this ratio is not given in the problem. So we consider that they should contribute to this deficiency in their profit sharing ratio. Now we know that the profit sharing ratio of X and Y is 3:2. So they should contribute to the partner Z's deficiency in the ratio 3:2. Now the contribution made by the partner X is equal to the deficiency amount of 3,000 rupees multiplied with his deficiency sharing ratio 3/5. Note here that this denominator value is obtained by adding the deficiency sharing ratio 3 and 2. 3 plus 2 is equal to 5, right? Now cancelling with 5, 5 ones are 5 600s are. Now if we multiply the remaining 600s and 3, we get 1,800 rupees. This is the contribution by the partner X to the deficiency in the partner Z's profit amount. Now the contribution made by the partner Y is equal to the deficiency amount of 3,000 rupees multiplied with his deficiency sharing ratio 2/5. Now cancelling with 5, 5 ones are 5 600s are. Now if we multiply the remaining 600s and 2, we get 1,200 rupees. This is the contribution by the partner Y to the deficiency in the partner Z's profit amount. Considering these contributions, let us now find how much is the actual profit share of each of the partners. Now the actual profit share of the partner X is equal to his share of profit as per the profit sharing ratio, which is 15,000 rupees minus his contribution to the deficiency in partner Z's profit share, which is equal to 1,800 rupees. Subtracting, we get 13,200 rupees. Now the actual profit share of the partner Y is equal to his share of profit as per the profit sharing ratio, which is 10,000 rupees minus his contribution to the deficiency in partner Z's profit share, which is equal to 1,200 rupees. Subtracting, we get 8,800 rupees. And finally, the share of profit of the partner Z will be equal to his guaranteed profit amount of 8,000 rupees. Now, for distributing the profit, we transfer the profit amount from the profit and loss appropriation account to the partner's capital account for each partner individually. In other words, there is a decrease in the profit amount available in the profit and loss appropriation account. So, we should debit the profit and loss appropriation account. At the same time, as we are adding this profit share to each partner's capital account, the partner's capitals are increasing. So we should credit the partner's capital account for each partner. Now the preparation of the partner's capital account is not in the scope of this problem. So let's leave out the partner's capital account related entries and let's directly post the profit and loss appropriation account related entries into the profit and loss appropriation account. Let's first write the subheader profit transfer in the particulars column on the debit side. Let's then write to X capital account. Let's then write partner X share in profit calculated as per the profit sharing ratio, which is 15,000 rupees. From this, let us lessen his contribution to the partner Z's profit share deficiency from guaranteed amount. This is 1,800 rupees. Now from 15,000 rupees, if we subtract 1,800 rupees, we get 13,200 rupees. Let's write this amount in the amount column. Let's then write to Y's capital account. Let's then write partner Y's share in profit calculated as per the profit sharing ratio, which is 10,000 rupees. From this, let us lessen his contribution to the partner Z's profit share deficiency from guaranteed amount. This is 1,200 rupees. Now from 10,000 rupees, if we subtract 1,200 rupees, we get 8,800 rupees. Let's write this amount in the amount column. Let's then write to Z's capital account. Let's then write partner Z's share in profit calculated as per the profit sharing ratio, which is 5,000 rupees. To this, let's add the deficiencies received from other partners. Now the contribution to this deficiency by the partner X is 1,800 rupees. The contribution to this deficiency by the partner Y is 1,200 rupees. Now to 5,000 rupees, if we add 1,800 rupees and 1,200 rupees, we get 8,000 rupees. Let's write this amount in the amount column. Now the total on the debit side of the profit and loss appropriation account is 30,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is also 30,000 rupees. So the profit and loss appropriation account is balanced. With that, we have come to the end of the solution to this problem. Thanks for watching.
Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.